Good morning, everyone. Welcome to another session for corporate and economic laws. And I believe now you must have completed major part of the whole course. And today we are going to cover another important session on insolvency and bankruptcy code. Friends, though this is a new law, but it has changed the way the corporates are looking at this law and the way they are doing the business. So let us understand this whole world, which personally, again, I believe that it is very relevant, obviously for the exams, but very important for your career also. Because since last 3-4 years, there are so many chartered accountants who have entered this field and are practicing as insolvency professional. So let's start the journey. So friends, the Act came into existence in 2016. And to give you a background that why this Act was required and was there any provisions before this particular Act came into existence, what were the laws which were prevalent. So I will not discuss on all the old laws which were prevalent, but I will purely focus on this particular Act because we have so many things to cover. So the need, let us understand why there was a need. Friends, we all understand the recent buzzword, which is going around since last 3-4 years, where the government is pushing the concept of ease of doing business, friends. And we all understand what is the meaning of ease of doing business, which purely means that the players of the business should be given a particular field to do the business. And that field should comprise of the various laws, which should be very easy in terms of compliance, and then the environment of doing the business, where there are proper environment, and then there should be consumer part. So friends, when we consider the whole gamut of ease of doing business, if we look from the business perspective, there are 3 aspects. The first aspect is entry for doing business, where a lot of initiatives have been taken by the government, not today, not last 5 years, but I think since last 20 years, since 1991, where a lot of efforts have given by the government and initiatives have been taken by the government for allowing the people to start their business in India, and also for people outside India to come into India and do the business. Then the second concept comes in when they enter into the business. Probably everybody wants a level playing field for doing business on a fair basis. So we have a lot of laws which takes care of this, be it the Competition Act, with the Consumer Act. If you name any law, probably it creates a common platform for all the businesses. So there's a level playing field for all the businesses. So people thought, yes, the entry became easy to do business in India. Then people thought, yes, we have a level playing field for everyone who is doing a business. There are fair laws which takes care of all the concerns for the businessmen. But then somebody thought that, if I want to close down my business, is that a possibility? If I want to sell my business, yes, selling is a possibility. But if I want to close down my business, is that a possibility because of ABCD reasons, whatever reasons? Yes, there were laws which allowed the companies or the business people to close down the business. But those laws were very old, first, second, very time consuming, and third, very cumbersome. So the government thought to create the whole gamut of the business atmosphere, if you see this set of doing business, then the government thought, let's create another law which will give a leverage or facility for the businesses to exit the business also. And therefore, this particular law came into existence, which provided an exit for the business under ABCD conditions. So once you understand the entry, the level playing field, and the exit, now we understand this whole circle gets completed, and now India stands at equal footing across the world in terms of attracting business people within India as well as outside India. So that is why this IBC came into existence. Now, what are the features of this code? Obviously, telling you the features at this time, probably it will not come into your mind. until unless we understand the whole law. But to give you certain, the highlights, it's a comprehensive law, because before this law came into existence, there were multiple laws which took care of the exit and the insolvency provisions. And therefore, all the multiple laws were subsumed in this as the GST Act got entailed, the consumption of all the various other acts. And probably this IBC also, subsumes a lot of other acts. That is why it is referred to the code. Then no multiplicity of law, because this is a uniform single law which takes care of everything. Low time resolution, I think that's the time advantage which this particular act gives in. Probably before this law came into existence, the insolvency part or exiting the business took about more than 3, 5, 7 years before they could close down the business. Then one window clearance. Before that, there were multiple windows where we have to approach and get the clearance. Now this is a one window clearance. And with the one chain of authority, we'll understand who are the authorities. And yes, the interest of the workmen and employees are taken care of. Obviously, interest of other stakeholders are also taken care of, but then priority is given to the workmen and employees also. We'll see under section 53 of this particular act, friends. So if you see the developments which have happened, all those acts which have now been framed are basically trying to remove all the older provisions, older laws, and then cutting down all the laws and bringing them under one shape. So IBC is again a newborn baby, but it has all the genes of the previous laws, removing the anomalies. Friends, I think when we talk of insolvency and bankruptcy and liquidation and winding up, I think these are the four words which are, interchangeable at times when we talk in common language. So is there a difference between insolvency, bankruptcy, winding up, and liquidation? Yes, friends, there is a difference, because each process may be linked to the previous process. Now, when does insolvency arises? What is the trigger point for insolvency? So in this whole act, we'll understand from the point of view of two angles. Again, highlighting those two angles. One is purely from the individual part, which is not part of your course. And the second is related to the corporate people, corporate world. So that is the companies. So we will be talking majorly covering the insolvency process for the companies, friends. So if you segregate it, so insolvency can be termed in relation to individuals as well as companies. Now, when does insolvency situation arises? Which is a very common thing and which is very natural at times, because it may happen with everyone. And it's a state where that company or that individual is not able to pay the debt, and probably whatever value in terms of assets he has, that is not sufficient for him to repay the debts. That is why that insolvency situation arises. So in purely accounting terms, when the liabilities are more than the asset part. And we see there are a lot of balance sheets of the companies and individuals where the liabilities are more than the corporate part. So what should they do? So they can come under the umbrella of IBC and then take the steps for going for insolvency, and whatever the consequences happen because of insolvency. So insolvency is a state, friends. It's a particular situation. So this is my state. I'm not able to pay. Now what can happen? So if I'm not able to pay as a company, if I'm not able to pay, what can happen, friends? So the situation could be, that the insolvency can be treated. It can be treated. Now, how it can be treated? So it can be treated for non-corporates in terms of a repayment plan and a recovery. So that can also happen, that, I can tell that I can repay this loan and give me some time, 5 years, 10 years, 15 years, whatever the situation. And then I can repay the particular loan. And it may not be the full loan, it may be part of the loan. So that may be a possibility. And the second part for the corporates part, that, for corporate, if it is treated, it is termed as a resolution plan. So a resolution plan, which will again highlight that how that particular company can be taken over and how the stakeholder, that is the creditors, could be paid off. And that is the resolution plans. Friends, so insolvency has a treatment. So this particular act provides a medicine to the state of insolvency. Again, mark my words. Act provides a solution. So friends, remember, first thing, in our mind, a thought should come, not a thought, I think it should get into your mind, that insolvency bankruptcy code is not a problem for the business. It is providing a solution for the business. So it has to be taken from that angle, that perspective. That is, it has got certain solution. Apart from the compliance part for different stakeholders, there is a solution. So friends, when there is a solution in this world, why not take that solution to the people who need this particular solution? People who are facing this problem. So problem is about insolvency. So insolvency is a state which is a problem for individuals and companies. And they can come to the IBC code, which will give them a solution. Solution of what? So solution there. If they are not able to comply, or not, if not comply, probably the solution is not working for these people. Then what can happen? So friends, if insolvency is not being able to being treated as per the code, then it will lead to bankruptcy. Bankruptcy for non-corporates and liquidation for corporates. So now you understand that today the difference between the word insolvency, bankruptcy and liquidation. So insolvency is a state where liabilities are more than asset. Insolvency, if treated good, are there, but insolvency if not treated, it can lead to bankruptcy and liquidation. So bankruptcy and liquidation are consequences of insolvency, and they will come later to treat the state of. Question would come in, friends. What is dissolution? This world, friends, let me tell you again, friends, 5 words. Insolvency, a state. Bankruptcy and liquidation are a consequence of insolvency. If it is for individual, it is bankruptcy. If it is for corporate, it is liquidation. Then after liquidation, what will happen to a company? Obviously, it will be dissolved because there are no assets, there are no liabilities. What will happen to the company? So dissolution. So dissolution will come in after the process of liquidation is over. So dissolution is a consequence of liquidation. Liquidation is a consequence of insolvency. That is the relationship. Insolvency, liquidation, dissolution. For individual, I think bankruptcy would be the end, the conclusion part, because nothing is to be dissolved now. Because in the corporate world, company is a separate legal entity. So that is why we have to again dissolve that separate legal entity. What about winding up, friends? Let me tell you, friends, winding up is also a process, but that is not covered under IBC. Winding up is a process that is covered under Companies Act. So that is also a particular state for a particular company where the company could be wound up as per the provisions given in the Companies Act. IBC talks about the state of insolvency to be treated. Winding up may be a result, a solution, not because of insolvency. There could be other situation also which may result in winding up, right? For example, there could be a state where the companies are not fulfilling the objectives, and or they are trying to act in some way which is detrimental to the national security. So in that case, the company could be wound up, but that is not the provision under insolvency, because under insolvency the condition is an insolvency state should be there. Winding up, not necessarily there should be a state of insolvency. So friends, winding up will be covered under Companies Act, and other than winding up, if you want to close down the business, we have to come under the Insolvency Bankruptcy Code. Condition is there should be a state of insolvency. So I hope now the words are cleared. I have mentioned the words insolvency, bankruptcy, liquidation, dissolution, and winding up. The difference is very much clear. So again, going back to the objectives of the code, after understanding this whole 5 interchangeable words, the terminology which are used in this world of bankruptcy, insolvency, the features or the objectives of the code has been to, what is the whole purpose? Is the whole purpose liquidation, dissolution? No, friends. The whole purpose is to bring a resolution. The whole purpose is to treat insolvency. That is the purpose, friends. The purpose is not to treat insolvency. Now, when we want to treat insolvency, what could be the possible purpose? Obviously, the treatment will ensure that all the creditors get their money. That is the treatment which is required out of this code. That whoever are the liabilities, the liability amount should be paid off to the maximum possible extent. Now, if that is the objective, that if you want to give maximum amount to the creditors, how that will be achieved? Probably that can be achieved by maximizing the value of the asset. So if you maximize the value of the asset, we will be able to give a maximum value to the creditors also. That is why the objective under the IBC code would be to maximize the value of the interested person. The interested person are obviously all the stakeholders, friends. So that is the first and the important feature of this particular objective of this code, to maximize the value. Now, how will the value would be maximized? So will we allow to let the process go on for 2, 3, 4, 5, 7 years? No, friends, we all understand the concept of time value of money, isn't it? So to create that maximization, probably a time frame has to be given. So under the code, one of the objective is to fix time period, and that is very essential so that the value maximization happens. Then the other concepts, the other objectives are to promote entrepreneurship. Now, friends, you would question that how entrepreneurship is related to insolvency. Now, let me tell you, as an entrepreneur, as a businessman, when he starts his business, he always has in his mind, at the back of the mind, that what will happen if I fail in business? That is always a particular element of doubt, which is always there. And with regard to the new buzzword or the new kind of businessmen which have come in last 10 years, that is the young generation of this world, including you, where I term this as the young generation, the yo-yo, high dude, high bro type of generation. We who have started the ecosystem of startup. Now, when we all know that, these startups which are arising in so many numbers, where there's a lot of failure which can happen. Now, if there's a failure is a part of starting of the business, of doing anything new, what can happen to me? So therefore, if there is a law which takes care of the insolvency state, probably the entrepreneur will have in his mind that there is a solution which is provided in the particular act, and so I don't need to worry about the failure part, a state of a situation where I'm not able to pay the debts, because IBC will create a particular solution, friends. So to imbibe that thought into the people, this act came into existence so that people now are comfortable and don't think of, failure. Obviously, failure should be on a natural and a fair basis. It should not be, the failure should not be because of certain improper acts. So to promote entrepreneurship, the code was introduced. And to increase availability of credit, because as a lender, friends, today if the bank is giving a loan, probably it looks at the security. They are more concerned with the security, whether this security will be enough to repay the loan, friends. Now, today the banker knows that if there is a solution which is provided under any law, that I will be able to maximize my value of the loan which I have given, probably he will again increase that credit, or the ease of giving credit will, be structured. So today the banker may not consider the value of security, but they will consider the value of business and the cash flows of the business, rather than looking at what is my collateral, what is the security I afford. Because in insolvency, if a business has got value, then it will generate the maximum value for the creditors even in the state of insolvency. If the business has got value, maybe the assets may not have that value, but the business is having value. So the bankers, the lenders will now have a different perspective when they give a loan, and the perspective would be that they will look at giving a loan from a different perspective of cash flows and the analysis of business, rather than analysis of the value of security. So that is again one of the objectives of the code, friends. Yes, because there are so many stakeholders involved, everybody questions that stake, and this particular act clearly defines the priority of the stake of different stakeholders, where one of the major changes which have happened under this act has been that the priority has been given to all the secured lenders, including the workmen dues. So that has been a major change in this particular act, and statutory dues have gone below and they have not been given a priority under this particular act. So that is again one major change, because it has been thought that people who lend money to the company, probably because of that particular money, the business is being able to run. Business is able to create that maximum value. That is why they have been given a priority. People who lend money. And yes, finally, one objective is to create a board, that is the Insolvency Bankruptcy Board of India, as a regulatory body. As I told you before this particular act came into existence, there were multiple authorities, and each authority had their own wisdom and thought to to ensure that the insolvency generates value. But now all the authorities have been removed and only one authority, so that there is a single chain of authority, and that is the Insolvency Bankruptcy Board of India, which is a regulatory body for insolvency and bankruptcy law, friends. So with this objective in mind, I think we now understand what is the objective. What is the code providing? Code is providing a solution to a state of insolvency, solution through resolution plan or recovery repayment plan. And if the solution is not being able to work, this code also provides that how the company would be liquidated, or how the individual can go through the process of bankruptcy. So this code provides that particular mechanism for liquidation and bankruptcy, and finally it will lead to dissolution, friends. So now the objectives are clear, the applicability of that particular situation is clear. Let us now jump into the various provisions of this particular code, which are more related from the exam point of view. So when I give you the thought of IBBI, the regulatory body, is the IBBI a standalone authority which will ensure the process of insolvency bankruptcy code? No, friends. IBBI needs supports of various institutions to ensure the process of insolvency and bankruptcy, and for that there have been establishment of 5 pillars. So 5 pillars of this whole IBC code has been framed, which will support this whole process, friends. So the 5 pillars are the IBBI, that is the regulatory body. Within that regulatory body, we have 3 different institutions, that is the IPA, Insolvency Professional Agency, IPA. Then there are the insolvency professionals like chartered accountants, company secretaries, CMAs, cost and management accountants, and advocates. And then we have the information utility also. So these are the 3 agencies which are supporting IBBI to execute and administer the process of insolvency and bankruptcy. To execute and administer the process. And then finally we have the regulatory mechanism, the adjudicating authority, that is NCLT and NCLAT. NCLT and NCLAT. Remember, friends, NCLT and NCLAT. So there are 2 mechanisms, 2 regulatory agencies, adjudicating authorities, that is NCLT and NCLAT, friends. Now, NCLT is National Company Law Tribunal, which we all understand is under the Companies Act, and the Appellate Tribunal, that is NCLAT. Apart from that, there are 2 again more regulatory agencies, the adjudicating authorities, that is DRT, which we have studied under SARFAESI. Remember, when I was taking the class of SARFAESI, I had mentioned the word DRT, Debt Recovery Tribunal and Debt Recovery Appellate Tribunal. So for corporates, it would be NCLT, which we all know. But for individuals and partnership firm, it would be DRT and DRAT. That they are the adjudicating authority under the Insolvency and Bankruptcy Code. So remember the 5 pillars: the IBBI, IP, IQ, and the AA. Adjudicating authority, in short, will be referred to as AA. Right? In our presentation also, I'll be referring it to as AA. So this board was established in 1st October 2016. A few days back, they celebrated the annual day. As we all chartered accountants celebrate our annual day on 1st July. Same way, IBBI celebrated the annual day on 1st October, and because it was born on 1st October 2016. And as SEBI, remember we had studied SEBI. SEBI is again a regulatory body for all the intermediaries and the investors and the intermediaries and the issuers, the corporate. Same way, SEBI was in the form of a body corporate. Same way, IBBI is in the form of body corporate. And when it is in the form of body corporate, it will, it can do anything. It will have a perpetual succession, and it can acquire and hold and dispose of the property. Then we have the IPA, which are established within 3 objectives, with the 3 functions. The 3 functions are regulatory functions, where they will create, draft the standards and codes that are made public and binding on all the members of IPA. I will come to the members of IPA. Then they will monitor, inspect, and investigate the members on a regular basis. So on a random day basis, they can do the monitoring and inspecting part. And they will ensure that the conduct of IP duties are proper, and they can gather information of their performance, and any frivolous behavior can be reported to them. And then they have a quasi-judicial functions also, where they can address the grievances of the aggrieved parties, hearing complaints against members, and taking suitable actions. So IPA is an agency which can be termed as similar to, let's say, ICAI, or ICSI, a similar kind, not exact, but then similar kind, where there are a lot of members who enroll themselves as a member of IPA, and IPA is a part of the whole structure of the administration of the IBC code. So remember, is it relevant from exam perspective? Yes, a direct question regarding the functions or MCQ can come on this particular part. Then the second administrator, the executor, comes as an in the form of insolvency professional, friends. He is the actual person who is in the field, who is doing the job to execute the whole process under IBC. And because he is doing the job, whether the job is being done in the proper manner as guided under the law, that is why there is an agency, that is the IPA, who will monitor and ensure the performance of insolvency professional. So they are basically the intermediaries who will ensure the proper working of the bankruptcy process. And who can be an insolvency professional? So we'll understand that who can be the insolvency professional. The functions have been defined. So at various point of time, we will discuss the roles and duties of all these insolvency professional. But as a member of any agency or institute, probably they have to follow the code of conduct. And normally the code of conduct are same as you must have studied in various other acts, including the audit chapter. So the code of conduct basically will cover to take reasonable care and diligence while performing duties, and to comply with all the terms and conditions of the laws, to allow the IPA to inspect, to submit a copy of the records for every proceeding before the AA and to the board, as well as to the IPA whenever required. And whatever instructions have been given, specified under the law, they may perform they have to perform their functions also. So a normal code of conduct, but yes, very strict, friends, remember, and a lot of compliances are there on the IP, and IBBI, IPA, they do ensure that the IP tries to complies with the various provisions under the law by regulatory filing, by regular filing of various forms and information to the IPA and the IBBI. Then we have another agency which is now again a newborn baby, that is information utility, IU, which is similar to an information database, friends. We have studied in Surfasi, SARSAI, it's a central registry. So in same way, this IU is an information utility which will collect, collate and authenticate all kind of financial information of the debtors. Now you would say, sir, what then MCA does? So obviously MCA will also, there are information which are given to MCA. All the annual returns, the information about the corporates are there. But remember, MCA will take care of the corporates. What about the non-corporates? Are the partnership firm filing any kind of information? If the company comes under insolvency, whether we are filing any kind of information. So friends, therefore, this information utility will cover the whole gamut of the stakeholders involved. So it will collect all kind of information from the company. So let's say, for example, if a bank has given a loan to a particular party, so the bank can submit that information to that information utility that I've given this particular loan, this is the security which I have created. If it is a company, they have to provide that information in the form of charge creation to the MC also, ROC. So if it is a company, if it is not a company, then they can give this information to the information utility. As a material supplier to any company, I can give this information to the IU that yes, I have supplied this material to this company, kindly record it. The information utility will follow a process to confirm whether that supply has been made and whatever the process are there. And therefore that particular information will be recorded, friends. So the code requires creditors to provide all kind of financial information of the debtors to this utility on an ongoing basis. And as a insolvency professional, adjudicating authority, IBBI and other stakeholders, they can have access to this particular information utility to gather the information whatever has been given by the respective creditors, which is obviously subject to verification. The IU will follow a process to verify all this. So information utility is like an information database, and very important. It has just started. I think in last 1 year it has gained momentum, and probably in times to come, we as chartered accountants can play a very important role in providing a lot of information to the IU, and especially we can advise to our clients that if you are giving any loan to any particular party supplying material, we should always update this information to the IU part. So the functions have been defined for the information utility, and I'm not going through details of these functions because you can very well refer it. Yes, relevant from exam again, relevant from exam because a direct question will come in that what are the functions of IU, and an MCQ can also come in. Then the role of adjudicating authority, which is very important, where under this code, very important element which has been brought in, that all the process under insolvency will be, fall under the jurisdiction of NCLT, and after NCLT it will be the appellate tribunal, and thereafter it will be directly to the Supreme Court. That means there is no role of High Court coming in this whole process. That speeds up the whole process. That speeds up the whole process, friends. And that is why the time frame has been reduced from n number of years to, n number of days. That's the major change which has happened. We'll discuss the later at a later point of time. So A refers to NCLT and NCLAT for corporates and directly then Supreme Court. And for individuals, it would be DRT and DRAT. Now coming to the IBC code, let us go through this particular code and understand the whole structure. Friends, this code has been divided into 5 parts. 5 parts consisting of 255 sections. So you would be worrying, sir, we have to study those 255? No, friends. Each part deals with distinct aspect of insolvency. So there is one part for corporate people, then the other part for individuals and partnership firms, and then the other part for the IPA part, and then the other miscellaneous provisions are there. So there are 5 parts, and we are more concerned with the second part, part 2 of this IBC code. where it especially focuses on the corporate world, that part 2. And within part 2 also, there are chapters 1, 2, and 3. Not the whole chapters, will not be focusing on all the chapters because the coverage is limited at this current state. Because remember, friends, one of the important provisions under this code is that as if you want to practice in this area, you should have a minimum of 10 years of experience before you get into the practicing world of insolvency professional. So therefore, maybe the thought is that today you should have a basic knowledge of the whole code and understand the whole, the major focus on the resolution part and not going into the intricacies of the particular act. So there are 5 parts focusing only on part 2. Why not the other parts, friends? Because today the insolvency process for individuals and partnership firms have not been notified. They have not come into action, and today only insolvency applies to the corporate persons, not to individuals and partnership. Though the laws sections have been framed, but they are yet to be notified, friends. So therefore it is not within your course. Now the act, let's understand the spread of this particular act, where it applies to whole of India, including J&K. The act was enforced in 2016 from 28th May, and then the effective date was around 1st December. So that is when the act came into existence, and actually the law started applying to corporates. And thereafter we have a lot of amendments from 2017, 18, 19, and then recently major amendment came into existence in March also. So 2019 there were major amendments, and so there were about 4 to 5 amendments which have been done to this particular act. And still, so now you can understand there are a lot of involvements which are going on, because this was the first time this kind of law came into existence. And a lot of cases, scenarios came into picture once this law was enforced. And as the law evolved, as the process got evolved, as the situation came in front of the authorities, they made respective changes to particular law. And today still again evolving, because the situations which could not be envisaged when the law was framed, they are now coming in front of the authorities. Therefore, a lot of action is taking place in this particular world, and regular amendments are being done to ensure that the whole act achieve its objective as why it was been framed. So till now, a lot of amendments have been done. Apart from the section, the main core section of IBC code, there are a lot of regulations. So for each act there are regulations, and the regulations are for the IPA, Insolvency Professional Agency, then the regulations for the insolvency professional, then the regulations for the process of insolvency, that is the insolvency resolution process for the corporate. Then we have the regulations for liquidation, and then we have the voluntary liquidation. So today, because it only applies to corporate people, so regulations have been framed for corporate normal process of CIRP, then the process for liquidation, and then a process for voluntary liquidation, friends. So apart from the code, we have to study regulations. Now, are they relevant from exam perspective? Probably I would only focus on few of the regulations, that too under the corporate regulations and liquidation regulation. And I will not discuss the regulation part, because they may not be much relevant from the exam perspective. Very important, friends, very important. Remember this particular section. I will mention the section, which is one of the major section which gives the power to this particular act. I can recall the particular line of Mr. Amitabh Bachchan in his movie Shahenshah, Rishte mein to hum tumhare baap lagte hain. Similar kind of this particular provision tells that, because Section 238 gives power to IBC to override other laws. Probably this kind of provision is not there in other acts, but under IBC it has got overriding provisions. So this law will always prevail over other laws. Now, what could be the possible situation where it could prevail? There are so many situations where this act actually is being applied in executing the whole process. Giving you one example could be, let's say, the company has not been able to pay certain amount to, let's say, the PF department or the income tax department. Then the last resort, the income tax department or the PF or any other act is the attachment of the property. So when the property is attached and when the company comes under insolvency, the property, the assets of the company has to be taken over by the insolvency professional. Now, when he goes to take over the assets of the particular company, he finds that the property is already attached. Property is already attached with some other authority. Now, can he ask from the authority to release that particular attachment? Answer is yes. How and why? Because under 238, the provisions of the code will override other laws. So therefore, I can ask the department to release that attachment, file their claim, and I will take over that, as the insolvency professional will take over that particular asset, and thereafter follow the process under this particular code. So the impact is of this particular section 238 is wide, and it is required because unless you don't give power to the people, stakeholders involved in this whole process, because the objective is to achieve maximization of value. So to achieve that maximization value, the person should have a hold on all the assets of the company. So therefore, under this act, this power has been given. So remember, section 238 has given an overriding power with respect to other laws also. So with this background, let us now come to the actual implementation. So applicability to companies. Today, currently it is applied to companies. So companies which are under Companies Act or any other previous act, they have been created, or any other act which has been notified by the central government. So basically all type of companies are covered. Then it will apply to LLP, because again LLP is part of the Companies Act. Then the guarantors to the corporate debtor, friends, very important. Guarantors to the corporate debtor. So corporate debtor means companies. So let's say if the directors of the company have given a guarantee to whom? Guarantee to the bankers, because the bankers have given a loan to the company. So even those guarantors would come under the net of insolvency. Very important, friends. Remember this particular point. I'm highlighting this point. So guarantors to the company, when the company has taken loan from a bank, so it will apply to the guarantors. And the law has been recently notified, and there are some news which are going in the papers with respect to an insolvency proceedings against a particular guarantor. You must be reading the newspapers. So it came into existence again only last year, and a very important provisions for all the guarantors. Now you would ask, sir, now that guarantor is basically an individual, and you had asked and you had mentioned that today the act does not apply to individual. Friends, yes, it does not apply to individual, but if that individual has given a guarantee to any bank, which has given a loan to any company, then the act would apply to that guarantor. Remember, so it does not apply to all individuals, but only specific individuals who have given a guarantee. Then to partnership firm, today not relevant. Proprietorship firms, not relevant. And to individuals, not relevant as of today. Then the question comes to our mind, friends, sir, whether does it applies to banks, whether does it applies to insurance companies? The answer is no, because these are the people who have, who have got a high stake in the whole economy. Therefore, the financial service providers have been excluded from this whole process. So banks, financial institutions, ARC. Again, remember, friends, we have studied ARC under SARFAESI. See, so if you see the Act of SARFAESI, the IBC, they are all related. In somehow, they are all related, friends. So that is why you need to study both the Act in conjunction. You have to see from the whole macro perspective that when will SARFAESI come into picture, when will insolvency come into picture, whether SARFAESI is beneficial, whether insolvency is beneficial. As a lender, what should I do? Remember, SARFAESI only applies to secured lenders. So as a secured lender, whether I should follow the process of SARFAESI or whether should I go under the IBC code. So as a solution provider, as a consultant, friends, you should be aware of both the acts to take appropriate action. So it will not apply to banks, financial institutions, ARC. That means they cannot go into insolvency. Nobody can apply to the NCLT AA for taking these type of companies or service provider to insolvency. Insurance, mutual fund, collective investment schemes. Remember SEBI, where I had referred to this word CIS, collective scheme, which has been framed under the SEBI Act, where they can collect money. Right. Then whether it applies to NBFC or not, the answer is yes, it does apply, but it only applies to on asset size of 500 crore plus, not below that. So there is some cushion which is given to the world of NBFC. Before, I think before 2019, even it did not apply to NBFC, but after 2019, it applies to the world of NBFC also. So remember, the Act does not apply to which class of companies and service providers, but remember the change which has been brought in. So friends, our focus would be totally in the world of corporate insolvency resolution process, CIRP. I've given you the background, the whole, the picture umbrella under where the process of corporate insolvency resolution process will go ahead. So there are about, altogether around 25 to 26 sections, which we have to study. Section 4 and then from section 6 to 32, which are relevant, along with a lot of regulations. There are about 40 regulations which have been given as a part of executing the whole process of corporate insolvency process. And then we have a lot of schedules. So our focus will be totally on the sections, that is 6.4 and 6 to 32. We will not be covering the regulations in detail. And the flow process, I think, again, as I told you, friends, it is very important to understand the stakeholders who are involved and the process. Now, with regard to stakeholders, there are so many stakeholders. And with regard to the process, let's take one process turn by turn. And every action, every act comes into existence because of particular situation. So let's start the trigger point. When will insolvency be initiated? When will insolvency can be initiated, or it can be initiated? When can I tell that person, or when can I tell that, yes, I am insolvent? So the trigger point has to be understood. Very important. Until as this trigger point does not happen, nobody will fall under the purview of this particular act. So the trigger point is defined under section 6. trigger point. That's a trigger point. That where any corporate debtor, now we are focusing on the corporate debtor, friends, not on individual and partnership. This is, remember, as I mentioned, we have to focus on the part 2 also, part 2 only. There are 5 parts of the whole code. So we are focusing on part 2 only, and part 2 covers only for the corporate people, remember, corporate persons. And so we are concentrating on this part 2. So we'll be using this word corporate debtor. So when I talk of the word corporate debtor, it will be defined under that, but normally in common parlance, it will be the company. So where any corporate debtor commits a default. So who will commit a default? Corporate debtor, which will be defined. And a default. Now what is a default? In common parlance, when you are not paying the debt, that is a default. But again, it has been defined. You will understand. Then a financial creditor. Who is a financial creditor? Question should come. Operational creditor. The corporate debtor itself, the company itself, may initiate the CIRB process in respect of such corporate debtor as defined in the chapter. So friends, the trigger point is the default. There should be a default. That is the trigger point. Until as the default does not happen, you cannot come under this particular act. So what does default means, friends? Let us understand what does default means. See, I have not started with all the definition part. What I'm trying to start with is for the process. And with respect to each process, if there is a definition required, we'll understand the definition so that you can relate the definitions with the various provisions. Otherwise, you start with the definition and then you are not able to relate those definitions where it will be used. So very important, friends, to understand that definition, why that definition was introduced, it is very important that we should understand the various provisions. So once we start with the provision, we'll relate with the definition. So what does default mean? So default will be defined somewhere, as obviously the definitions are given in either section 2 or 3 or something like that. So the definitions are covered under section 3 and 5. Now the question would come in, friends, why, sir, there are 2 definitions? Why there are 2 definitions? So there are 2 definitions because of the reason that section 3 definition will cover the whole IBC Act, including individual partnership. These are common definitions. And section 5 definitions are specific to CIRP process. Section 5 definition is specific to the corporate insolvency process. So that is where there are 2 types of level of definition. So who is a corporate debtor? Means a corporate person who was a debt to any person. Who was a debt to any person. First definition is who is a corporate debtor. So here we need to understand the word debt. In highlighting the word. What is a debt? And who is a person? So person has been defined and debt, we'll understand the definition of debt. So person has been defined here. So person, it means any company as defined in section 2.2 of the Companies Act and so on. Not that much relevant. Now, more important is the word default, friends. As I mentioned, the trigger point would be default. So default is non-payment of debt. Again, the word which is coming here is debt. So non-payment of debt. When whole or any part or installment of the amount of debt. So if the whole debt is not being paid or any part of the debt which is not being paid or installment of any term loan which is not being paid. So what could be the debt part? So it can be any amount of loan which has been given in the form of unsecured loan, secured loan in the form of cash credit, in the form of term loan, right? So that is basically a debt. So when whole or any part or installment of the amount of debt which has been given. So if you have not been able to part of CC also loan, because CC loans are payable on demand. So even if you have not fully utilized that particular sanction limit, but only a part, and if you're not able to pay that amount, when it becomes due. So non-payment of debt, whole or any part or installment, when it becomes due and payable. So whenever it becomes due, that is important. So a CC loan is due on demand because it's a demand loan. Right? It is a part of like a demand loan. Term loans are due when they are being, to be repaid as per the terms and conditions. So when they are due and you are not able to pay that particular loan or debt or the installment on the due date, and it is not paid by the debtor, obviously the corporate debtor or the corporate debtor. So the condition is that it should be non-payment of debt, whole or in part. And what should be the amount of default? So friends, remember, the trigger point is the default. We have understood the definition of default, that what is a default. It has been defined under section 3. And then the amount of default, friends, very important. What is the amount of default? The amount of default would be minimum 1 lakh, but then that amount is very small. So before 24th March 2020, before 24th March 2020, the minimum amount of default was 1 lakh. And after 24th of March, after the amendment which has been brought in, the minimum amount has been raised to 1 crore. Minimum amount has been raised to 1 crore. Now, you would say, sir, can you explain it in more detail? What is the importance of this date? So if the amount of default was 1 lakh, you could apply to the NCLT for initiating the insolvency process, even if the default was 1 lakh. But going forward, after 24th March, you can only apply to NCLT for initiating CIRP process if the amount of default was 1 crore. If the amount of default is 1 crore. Now, when that default happened, that default can happen before 24th March also. Not a problem. But amount should be 1 crore. Very clear. Remember, I'm not saying that default should happen only after 24th March. I'm only talking with respect to amount of default, not the default. So default can happen, let's say in 16th October 2019 also, 1 year back. But the amount should be 1 crore. So there is no restriction on the date part. Restriction is on the amount part. Amount part, remember. So previously the amount could be 1 lakh also, but that amount has been increased to 1 crore. So a natural question again, it comes into a lot of in the minds of a lot of students. That, sir, if the amount of default was 10 lakhs before 24th March, can I apply? The answer is no. Today, in the current context, you can only apply if the amount of default is 1 crore and more, not below that. So we have understood what is a default. Let us understand what is a debt. So default with respect to a debt. Remember the definition, default is with respect to non-payment of debt. Now what is a debt? Debt is a liability or obligation in respect of a claim which is due from any person, So it's a liability in respect of a claim. So there should be a claim from a person, and that liability can be in the form of a debt, can be in the form of financial debt and operational debt. Financial debt and operational debt. It can be in any form. Financial debt and operational debt. So friends, remember there are two types of debts. If an exam question comes in, two types of debt. What are debts? So remember there are two types of debts. Financial debt and operational debt. Remember, financial debt and operational debt. Now what is financial debt? Let us understand that financial debt. What is financial debt and what is operational debt? But before that, this word claim. What is a claim? Let us understand the definition of claim. So claim means a right to payment or right to remedy for breach of contract. Right to payment or right to remedy for breach of contract. So what is right to payment or right to remedy? So you have a right of payment for supply of material. You have a right of payment for the loan. So then you have a claim on that particular amount because you have supplied a material, so you have a claim. You have given a loan, so you have a claim. If you have that particular contract with that particular person, then if there's a breach of contract for that particular, if there's a breach of contract, then you have a right of remedy to claim that particular amount. So that means if that breach of contract gives you a right to payment, then you can claim that amount. Whether such right is reduced to judgment, fixed, matured, unmatured, disputed, undisputed, that is immaterial, friends. That is immaterial. Secured, unsecured, that is not the concept here. So reduced to judgment means it has been decided by a particular law. So if it has been decided by a particular law, we have a claim. Whether it has not been decided, not a problem. We have a claim. That means there's a debt, and when there's a debt, if there's a default, we can initiate the process. So condition is a debt should be there. Financial, operational, it does not matter. And a debt where there's a right of claim, and claim means a right of payment. Right of payment, right of remedy for any breach of contract also. Whether those claim is matured or non-matured, it does not impact. So friends, creditor, has it been defined? Yes, creditors have been defined, friends. Who are the creditors? So there are, whole lot of creditors which have come into picture now. Remember, friends, under the Companies Act, though there is no exact definition of creditor, no classification of creditor, there is a classification of liability, not the creditor part. Though there are liabilities of trade payables, right? Secured have been disclosed in a different manner. But here, there's one step ahead or a different way of defining those creditor as financial, operational, and secured, unsecured, and a decree holder. So creditor has been segregated into 5 parts. 5 parts. Creditor has been segregated into 5 parts. Now what are those 5 parts? Let us understand the definition of financial creditor. Understand the definition of financial creditor and operational creditor. Who is a financial creditor? Remember, this is financial creditor. FC means financial creditor. So going forward, I will refer the financial creditor as FC. So means any person to whom a financial debt is owed. Financial debt is owed. And includes a person to whom such debt has been legally assigned. Very important, friends, remember. Assignment is now again a common phenomena. Remember this word. Assignment means, let's say a bank has given a loan. Now bank thinks that I can sell this loan under SARFAESI. Remember? That was a possibility. So I have assigned my loan to some other person. I give that loan to some other person. So that person also will be regarded as a financial creditor. That person will also be regarded as a financial creditor, friends. Remember. Now what is a financial debt? That is important. What is a financial debt? It means a debt along with interest, if any, which is dispersed against the consideration of, very important, mark these words, very relevant, because a lot of disputes Dispute comes in because of this concept of time value of money. So financial debt is of such nature where there should be element of time value of money. There should be an element of time value of money, friends. Without that time value of money, it cannot be considered as a financial debt. For example, sir, examples would be that if a particular person has given a security deposit, and that security deposit does not have an element of interest under the terms and condition, whether that will fall under financial debt or not, the answer is no, because there is no element of interest involved in this agreement. So remember, today drafting of agreement becomes very important, because to classify it as a financial operational, which is very important in terms of IBC code. If you have a financial debt, your classification is as financial creditor. If it is not a financial debt, your classification will be as an operational creditor. And both have got different rights under the IBC code. Therefore, very important for drafting the whole agreement. Very essential part, friends. So time value of money, and includes what? What are the other things which are included in financial debt? Friends, you would be asking, sir, why are we studying financial debt? Again, going back to the whole definition, friends. Debt, a liability or an obligation with respect to a claim. Now, what is a claim? We have defined what is a claim. And why we need to understand the debt? Because debt is coming under the definition of default. And why there's a default? Because the trigger section is section 6, where it mentions that there should be default of a debt, and debt is a liability of respect of a financial debt or an operational debt. Therefore, we are understanding the definition of financial debt. Very important. Financial debt again will include what? Money borrowed, which simply means money borrowed against payment of interest. So as I said, time value of money, that is the first classification. Then amount raised. So we have not borrowed money, but we have raised an amount. For what purpose? By acceptance under any acceptance credit facility or its dematerialized equivalent. Now what is this, sir? Remember, this is kind of an facility given by the banker. Though not much prevalent in the Indian market, but it happens that you have it mostly happens in the foreign market, where a credit facility has been given by a particular banker with respect to, let's say, a material supplied by an exporter to importer. Now that importer wants money because it is importing some material from the exporter, so they want the money to be paid. So they approach the banker, and the banker gives an credit facility on the request of the exporter, on the request of the exporter to this particular buyer. So that is one example which can be amount raised. Then pursuant to any note purchase facility or the issue of note purchase facility means discounting facility, or the issue of bonds, notes, debentures. That means if an amount of loan has been raised through debentures, it will be covered under the financial debt. So a normal loan, money borrowed. So I borrowed money, a normal loan, term loan. But if I have not borrowed, it does not classify under money borrowed. Normally money are raised against issue of debentures. So when we have issued debentures, so in that case it will be treated as a debt. Then, very important, friends, please mark this point as very important. Including any other transaction by way of forward sale or purchase agreement having the commercial effect of borrowing. Now, What could be the possible example, friends, where we have raised an amount for a forward sale? In a lot of real estate projects, the real estate developers take an amount, they raise an amount, and they will enter into agreement that after 3 years I will sell this particular flat or the commercial building, right? Now this is an agreement purely in the nature of money given by a home buyer, a flat owner, in view of an agreement of purchase of that particular property. There is no element of money borrowed here, friends. But that amount has been raised. Remember, there is not money borrowed, but the amount has been raised. So this will have a commercial effect of a borrowing, friends. So very important. This very important from exam perspective. Separate question can come in. So any amount raised from an allottee under a real estate project shall be deemed to be an amount having the commercial effect of borrowing. So this is basically coming in to protect all the home buyers who have given a lot of money to the real estate developers, and where the real estate developer, because of certain reasons, is not able to complete the project, then that amount will be treated as a financial debt. Now, who are the allottees and real estate project? As per the definition of RERA, that whatever RERA defines as a allottee and a real estate project, they will be termed as a the person who has given the loan. So remember, friends, amount raised. Then financial debt with respect to any liability, in respect of any lease or hire purchase contract which is deemed as a finance or capital lease under the accounting standard. So remember, friends, I have segregated financial debt as money borrowed, which is very simple, amount raised because of different situation, liability when you have entered into hire purchase. So I have not raised in money borrowed, so I have entered into hire purchase contract. Because of that, I have a liability, so I have not raised an amount, full amount today. So therefore, that will also be covered under financial debt. Very important, friends. Derivatives. If I have entered into any derivative transaction for hedging purpose, remember, derivatives you must have studied in financial management, even in your accounting standards. So if I have entered into a hedging transaction for protection against the fluctuation part, then the market value of such transaction. And last, no, not last, there are so many things more to come, factoring. So if you have entered into a factoring arrangement, which is not a very common phenomenon in the Indian market, but anyway, if there are factors who are doing this kind of services, are they aware whether that particular loan or the amount given by the factor, will that come under the financial debt part or not? Yes, the person who provides factoring services. So any receivable sold or discounted other than any receivable sold on a non-recourse basis. Remember, when it is a non-recourse basis, you do not have a right to recover that amount from the person who has sold that debtor, because that is a part of the factoring agreement. So that is excluded, but apart from that, any amount which has been given in view of the factoring part, that is also covered. So friends, remember, I have segregated the definition of financial into different parts, plus more 2 parts. Any counter indemnity obligation in respect of guarantee, indemnity bond, documentary letter of credit. So when you have given a counter guarantee, a lot of corporates give a counter guarantee. So that counter guarantee will be regarded as a financial debt, or a simple guarantee also. So a guarantee and a counter guarantee which has been given with respect to any guarantee or indemnity bond, that is also covered under a financial debt. So more or less it covers a lot of things, friends, and therefore today very important to define a particular debt as financial debt. We should understand this clause so that later on there's no dispute regarding the classification of debt. What we are trying to understand, the classification of debt. Then the definition comes as operational creditor and operational debt. Operational creditor and operational debt. So who is an operational creditor? OC. Remember, we are trying to understand the definition of operational creditors. OC. So who is an operational creditor? A person to whom an operational debt is owed. And again, to whom such debt has been legally assigned or transferred. That assignment is always there. An operational debt means a claim in respect of the provision of goods or services, both goods as well as services, including employment. Including employment. Very important, friends. Or a debt in respect of the payment of dues arising under any law. So it can be any debt in respect of any law and which is payable to any government, which means what? Statutory dues, income tax payment, GST payment. So all those statutory dues will come under operational debt. Very important, friends. Remember this point. All statutory dues will come under the purview of operational debt, not financial debt. So it may be a state act law or a local authority, municipal taxes, is GST, right? So two definitions, financial debt and operational debt. Financial creditor, operational creditor. Now within this creditor world, there is one more segregation of a secured creditor. A secured creditor. Now obviously, normally financial creditor can be secured creditor. Can an operational creditor be a secured creditor? Most of the cases it will be no. It will be no. So secured creditor will always come into picture when it is a financial creditor. So under the world of financial creditor, we can have further two categories. Secured and unsecured. Secured and unsecured. Secured creditor, a creditor in favor of whom security interest is created. Security interest is created. Then what is security interest? I think we have studied this word security interest in Sarfasi also. Enforcement of security interest. Enforcement of security interest. Remember? So same way security interest has been defined. Right, title or interest or a claim to property created in favor of a secured creditor, which by a transaction which secures payment or performance of an obligation. So we are obliged to repay the loan because the secured creditor has the right or title or interest on that particular property, which secures actually the payment part. So if I'm not able to pay that amount, the secured creditor knows that he can sell that particular property and get that particular amount, and which includes mortgage, charge, hypothecation, assignment, and so on. And very important, that security interest shall not include a performance guarantee, because a performance guarantee is a type of guarantee which is dependent upon the performance of an execution of contract that is not covered under the security interest. And before starting with the initiation process, some dates with the date. Initiation date, the date on which the financial creditor, now we understand who is a financial creditor. Corporate applicant, we have not understood, we have not defined what is corporate applicant, we'll understand. Or the operational creditor makes an application to the A, so that will be the initiation date. So on that date, the CRP process is initiated. It has not started, I'm just initiated. I've just filed an application. Remember, there's a difference between the initiation date and the commencement date. two different words. Initiation, it is only making an application. You have just applied. And commencement is the admission of an application, where the order is made by the AA. Right? So remember the difference, the initiation date, the commencement date. Then there is a further process of liquidation commencement date. Liquidation commencement date. So what is the liquidation commencement date? When the liquidation will start. Then what is the insolvency commencement date? When the insolvency will start. Is there any difference between insolvency and liquidation? Yes, there is a difference between insolvency and liquidation. We have discussed this. What is the difference? And yes, these dates have a particular time frame, and that time frame has been given as 180 days. So the resolution period that has been defined, that is the 180 days. So let's have a closing date. So the closing date is basically the process has to be completed within 180 days. Remember, this whole process, 180 days, extendable by 90 days. Relevant from exam point of view. Very relevant from exam point of view. So you have 180 days plus 90 days more. In all, 270 days. Now what could be the possible exam question? Extension will be given only once. This is an exam question. When you have applied for an extension, who will apply? We'll see who will apply. That's a different question. But whenever the extension will be given by whom? The AA. That extension will be given once. So if you will apply for, let's say, 30 days, extension will be given for 30 days. But then next time if I want to apply it for more than 30 days, that is to 60 days. So that total period of 90 days is covered. The answer is no. Because the extension will be given once, whether it is for 30 days, 60 days or maximum 90 days. Extension is given only once. And the overall process should be completed within 330 days. Then your question would be, sir, what is the meaning of that 180 days plus 90, 270? When a time frame has been given for 270, why now 330 days? This is basically for any legal proceedings which have been pending. And because of that legal proceedings, there is some extension of the time period. So that particular extension can be covered, but the overall time period should not be beyond 330 days. Now, you would ask me, sir, is it practically followed? So in a lot of scenarios, you would find that the days are getting extended beyond 330 days. And that happens because of the legal issues which are pending at the court. It may be at the NCLT, it may be the NCLAT, or it may be the Supreme Court. So because of those legal proceedings pending, there are situations where the dates are extended beyond 330, and the power of the courts are there to allow that extension. So practically, scenarios do develop where the time period goes beyond even 330 days. That is a possibility, friends. Can it go below 180 days? So you are saying that it can go beyond 180, but can it go below 180? The answer is yes. There is a possibility of fast track resolution when the government thinks that, or when the company is very small. When the company is very small and we think that it has to be done within, obviously for a company of good nature, good size, not possible to complete it in 90 days. But if a company is very small, whether we can go below 90 days, 180 days, the answer is yes. So under fast track resolution process of CIRP, we can complete it within 90 days. So remember, the day is very important, exam relevant, exam question possibility with respect to the extension part, that how many times the extension could be done. Given answer is one only, the extension. So we have a dates with the dates. So initiation date, commencement date, and the closing date. 180 days from when? 180 days is from the commencement date. So once the process commences, so from that particular day, 180 days are calculated. 180 days are including the commencement date. Including the commencement date. Friends, after understanding the whole, trigger point, we have understood only the trigger point. Section 6, debt, default, 1 crore, debt, what type of debt? Financial, operational. What is financial debt? We have understood. Creditor with respect to financial debt, financial creditor, secured, unsecured. Operational debt, creditor with respect to operational debt is operational creditor. Now, let's initiate the process. Let us start the putting the application for initiation of CIRP process. Initiation of CIRP process. So let's start and give the application. So before we start with the application, let us take a small 5-minute break, and after the 5-minute break, we'll start putting the application. Jay sir, can we take a break? Jay sir? Jay sir? Okay, friends. So let's start understanding the whole process of putting up the application, and then after that, how that application would be processed, and whether the case would be admitted under the insolvency process. So the first application which can be given would be by the FC. We all understand FC is financial creditor. That is under section 7. So who can give the application, friends? So the application could be given by the financial creditor himself. So we have understood who is a financial creditor, who is given a loan or debt, or jointly with other financial creditors. So there are situations where we understand that there is consortium finance. So along with the consortium, they can apply, and any other person on behalf of the financial creditor whom the financial creditor authorizes that you can file on our behalf. So it can be by itself, jointly, or by any other person on behalf of the financial creditor. An application to whom? To NCLT. Which NCLT, friends? Today there are multiple NCLTs, and which jurisdiction the company would apply, the corporate debtor would apply. So to that NCLT, the application can be filed in. And especially in case of when the application can be filed, so when the default occurs, we have understood the definition of default and what is the amount of default. Now, in case of home buyers, we have understood that the home buyers would classify under the financial debt. So in case of, this is an exam question, remember. Financial creditors who are allottees, an application can be made against a corporate debtor by not less than 100 of such allottees, or by not less than 10% of total number of such allottees under the same real estate project, whichever is less. So the minimum number of home buyers or the allottees have been defined. Previously, this was not defined. So this is as a part of the amendment, where a minimum number of allottees should come together and they can apply for the filing of the application under the section 7. So not less than 100 or not less than 10% of the total number of such allottees. If the number is less than 100, then what will happen? So 10% of the number of allottees under the same real estate project. Remember, with respect to real estate project, no single allottee can initiate the KRP process. And if the company has floated many real estate projects, because it happens that, say, a company like DLF or Prestige, they have so many projects, the allottees of different projects cannot join together. So they should belong to a particular real estate project and fulfill the condition of minimum number of allottees. So if there are 5 different projects which are going on, the allottees of 5 different projects cannot come and club together. So it has to be project-wise number of allottees. That is the limitation which has been put in. So financial creditor defined for a real estate project. Financial creditor has been defined in terms of numbers. They will put in application to NCLT. Now what will NCLT do? NCLT, what is the next step the NCLT would take? So friends, the NCLT, so who can be the applicant on behalf of the applicant? This person who would be considered on behalf. So we understand that it can be a guardian, it can be an executor or administrator of an estate of a financial creditor, because in a lot of laws there is an administrator appointed, a trustee in case of debenture trustee, and a person who has been duly authorized by the board. So let's say if it's a company, so the company can authorize a person to make an to apply. So it can be by the authorization of the board. So there are different scenarios which have been covered. So on behalf of the applicant. Now when they will submit the application, what will happen? So along with the application, they will submit a record of default, because they have to ensure that default has happened, of giving an evidence where they will prove that the default has happened. or any information which has been filed with the information utility. Remember, we have understood the definition of information utility, and based on that, we can file an application. Very important, the name of the resolution professional proposed to act as a IRP. So along with the application, they will give the name. Then any other information as the IBBI may specify. So we have applied. Who can apply? It is clear. What are the documents which is required to be submitted? That is clear. These are all exam questions, friends. Remember, very important exam questions. A theoretical case study is framed with respect to section 7, section 9 and section 10. So please read these sections very carefully. So supporting documents very clear. Then what will NCLT do? So NCLT will scrutinize the document and the debt part. And the major concern would be the default. Remember, friends, there should be a default and the document should prove that default. So they will ascertain the existence of. So everything originates from the word default, friends. So whatever documents requires have been submitted by the financial creditor, so they will ascertain the existence of default, and when it cannot be ascertained because based on the documents, it will record its reasons in writing. It will record its reasons in writing that we are not able to ascertain the record because the information is not provided is not sufficient enough. So it may happen. Then what will it do? So either it will admit the application or reject. There will be two words which will be common throughout this section 7, 9, 10. Admitting, rejecting. So either I will admit the application or reject the application, right? So when it will be admitted, obviously when the default has been proved, application is complete. So there are three things which you have submitted. Default has been proved, we have submitted a record. Name of IRP has been proposed. So default has been proved, application is complete with whatever requirements as per law, as per the filing of application rules which have been given separately. And there is no disciplinary proceedings pending against the proposed IRP. So when no disciplinary proceedings are pending, then the order will be admitted. Or when it will be rejected, when the NCLT is satisfied that no default has occurred. So when there is no default, because default has got some definition, that is debt should be due, payable in part or whole, that is a condition. So, and it should be a financial debt. So if there is not a financial debt, then application number 7 is not valid. So we have to prove that the debt is financial, a default is occurred. So financial debt within the definition of financial debt, default within the definition of default. Then because a lot of disputes have come in on the question of whether it is a financial debt or not, whether default has happened or not. Because if you filed an application against a corporate debtor, the corporate debtor will object on these points only. What are those points? Default, financial debt. So these are the two major points of dispute. Then when the application will be rejected, obviously opportunity will be given to be heard. So this opportunity will be given to rectify the default in this application within 7 days of the receipt of the notice from the NCLT. So friends, orders will always be of two types: order admitting, order rejecting. Order admitting, order rejecting. So in answers also in your exam questions, you will say the NCLT will pass an order of admitting the application, rejecting the application. Now let us understand the process of OC, section 8 and 9. Prerequisite before filing of application by OC of section 8 and section 9. I have received few questions from Varsha, Shubham, Nishant and Kumar Singh, and I will answer those questions later on. Yes, one of the common question is by Nishant, where they've mentioned the names in examples. I have not really given any case study so far, so therefore no names been mentioned. One or two examples have been given. I will do that. I'll give you all the next class I'll be covering the scenarios. So in that we may take the examples with the name. Difference between winding up and dissolution. I think dissolution is the last step, and winding up and insolvency are a pre-step to dissolution. I think that is the major difference. Winding up only happens in Companies Act, while dissolution may happen under Companies Act and also because of IBC also. Applicable of 1 crore, I believe that 1 crore would be applying to November 20 exams because the exams have got postponed. Also 6 months, I believe that 6 months deadline has been given for any act to be applied for the exam part because it came into existence on 24th March. So if you take 6 months, so that becomes around September. So it would be applying to your November exams also. So remember, Mr. Singh, that please look into the amount of 1 crore only when you answer the question. Okay, so let us start with the concept of operational creditor, section 8 and section 9. And if you observe the number of cases which have been filed, so if let's say there are 100 cases, for an example, 100 cases which have been filed under NCLT, so 60 to 70% would be on behalf of the operational creditor, and 30-35% is on behalf of the financial creditor. So that highlights the importance of this section 8 and 9, where a lot of operational creditors have applied to NCLT for filing for insolvency. So the prerequisite now, because there are two sections under financial creditor, there was only one section, section 7, financial creditor, section 7. For operational creditor, two sections, section 8 and 9. Section 8 and 9. So what is the scenario? Same, there should be an occurrence of default. That is always a prerequisite. Now, section 8 says that when there is a default, let's say for example, when you hear in the news that Reliance Telecom or company like Reliance Communication has been brought to insolvency, or a company like Aircel, how, why? So there has to be a process to be followed in terms of operational creditor. So there should be a delivery of demand notice to TD. Very important, friends. There was no such condition for financial creditor. That means a financial creditor does not have to give a demand notice. So here, a demand notice has to be given before filing an application. Before filing an application, that please clear my dues. This is my unpaid amount. This is the amount of default. Please clear my outstanding default amount. And that has to be given in Form 3 and Form 4, which has been specified. The format has been specified. So normally Form 3 and Form 4 is to be given by the operational creditor to the company from whom the amount of debt is due. Then the corporate debtor has to respond in 10 days. Very important. These are all matter of dispute at NCLT. These are important deadlines. So the company has to respond within 10 days of the receipt of demand notice. Remember, 10 days. What he has to reply? That there is an existence of dispute, friends. Very important word. There is an existence of dispute. And he will produce an evidence of any suit which is pending or any arbitration proceedings are being going on. And that proceedings or suit which is being pending, that is before the receipt of notice. Very important. Receipt of notice or invoice. Before the receipt of notice or invoice, friends. That is very important. So that dispute should be before the notice was served. before the notice was served. So either they have to prove the existence of dispute, or they have to produce at NCLT the payment of the unpaid operational debt, that I have paid this amount by EFT or by a record of the check that has been encashed by the operational creditor. So on two account I can reply to the operational creditor. I don't have to apply to NCLT today, right? So we can reply not to the NCLT, we can reply to the operational creditor that this payment has been made, and I will give the record. So once this prerequisite step is done, that after expiry of 10 days from delivery of demand notice or invoice, the operational creditor will not receive payment, or he will not receive the notice of dispute. There can be two scenarios. So I don't receive the payment, I don't receive the notice of dispute. So for example, as Mr. Shubham has, Mr. Nishant. So Mr. Nishant, you are an operational creditor, and you have given a notice to a company because you are being chartered accountant. You have given the services to the extent of, let's say, 1 crore, an amount of more than 1 crore, and you have not received any payment. You have given a demand notice to the corporate debtor, and you don't receive any payment even after demand notice is served as specified in the rule, or you don't receive any notice of dispute, then you can file an application. So the question comes in, what is a dispute, friends? What is a dispute? Very important, exam relevant thing. Dispute is a general word which will include, see, remember, dispute is a very general word because the word here defined is that it is include. So dispute in general means dispute and will include a suit or arbitration proceeding relating to the existence of amount of debt, quality of goods or services, a breach of representation or warranty. So this is including, but otherwise also you can always raise a point on the dispute part. So dispute has been defined, that what does dispute means. If you don't receive a notice of dispute, you can file an application. So filing of an application will only start once the operational creditor fulfills the condition of serving the demand notice under section 8. Under section 8, friends. Remember, this is very important. So once you submit, then you can file an application. Now, what are the documents? Remember, under financial creditor, you have to submit again a proof of default. Along here, in operational creditor, what you have to submit, because you have submitted a required document to the corporate debtor, so you need to submit the copy of invoice demanding payment of demand notice, DN, which has been delivered to the operational creditor. An affidavit that I have not received any dispute. An affidavit that I have not received any dispute from the company. A copy from my bank account, where I am maintaining my bank account, that no payment has been received from the party. No payment has been received from that particular party. So I will produce a certificate from the bankers. Remember the point, if available. It is not 100%, but in most of the applications they do submit. But there may be scenarios where you may not have this particular certificate from the financial institution. Maybe in a condition where the bank is not situated in India. the banker is situated somewhere else in the foreign country. Can a foreign company file an application under NCLT? The answer is yes. Can file an application. Not a problem. And if that particular certificate could not be produced, it may be valid. The application may be valid because it is said if available. Then either you can submit a copy of the record with information utility if you have submitted. Remember, we have discussed the information utility concept. Right? And any other proof confirming that there is no payment of an unpaid operational debt by the corporate debtor or such other information as may be prescribed. Any other proof confirming that there is no payment of an unpaid operational debt. Right? So these are the supporting documents which will be submitted by the corporate debtor. So what is going to happen, friends? Again, two scenarios. When you submit an application, the NCLT will either accept the order, accept the application, or reject the application. So when can they reject the application? All these are exam questions. Reject the application when the application is incomplete, you have not submitted the full information, or the corporate debtor proves that they have made the payment, so the payment has been made. Or this is a more common exam question where the creditor has not delivered the demand notice. So it happens that without serving the demand notice, you file an application, it will be rejected. Or if a name of IRP has been proposed in the application, remember, though there is no such condition mentioned out here, there is no such condition mentioned out here. But suppose the name of IRP is being proposed within the application, then if any disciplinary proceeding is pending against that proposed RP, and a notice of dispute has been served, has been received by the OC, or there's a record of dispute in the operation information utility. So that is why, friends, very important, the role of information utility. The role of information utility. Very important role. Very important. If those informations can be retrieved, recorded in IU, and they can be produced as an evidence, probably the court will always consider this information from IU because that is coming from a third source, coming from a third party. So that is why in due course of time, the role of IU will be very important. Or it can admit the application. The application can be admitted when it is complete, then there is no payment, the creditor has delivered the invoice, no disciplinary proceedings are pending, and no notice of dispute. So it is just exactly the reasons of rejecting the application. So you don't need to remember both the things. You remember one thing and you will automatically get the answer of the second part, admitting the application. So we have covered two sections majorly: application by financial creditor and application by operational creditor. Major questions comes from this particular section, section 8 and section 9. Then section 10, very relevant, and you will not find many cases filed under section 10, but it's one of a very peculiar situation where who can file an application where a corporate debtor has committed a default. So default is a prime word. A corporate applicant, very important, friends. Corporate applicant. A corporate applicant can apply. Corporate applicant. Who is a corporate applicant? I mentioned that, we'll define corporate applicant. Means corporate debtor. That means the company itself can apply when a default has happened. A default has happened. That means today the company can itself go for insolvency. That is insolvency application by the company itself. Remember, the questions could be framed in such a way. Can a company itself go and apply for insolvency proceedings? The answer is yes. The answer is yes. Under section 10, it can apply. Condition is there should be a default. Default to whom? Default to financial creditors, default to operational creditors. Can be anything. So instead of an outside party, the operational creditor coming in, financial creditor coming in, the company itself goes to the NCLT and applies. Then, a member or a partner of the corporate debtor who is authorized to make an application for CRP process under the constitutional document of the corporate debtor. So, a member can also go. A partner, that means within the LLP, we know there is a partner. So, a partner can also go. They can also apply if the constitutional document permit them. Then, an individual who is in charge of managing the operations, CEO of the company, can apply. He is in charge of managing the operations. Right? The managing director can apply. A person who is involved in financial affairs of the corporate debtor, control and supervision. The CFO. The CFO can go and apply. So very important, friends. Section 10, where the member, where the individual who is managing the affairs of the company, where the CFO and the company itself can go and apply under section 10 when it is a default. Supporting documents. See, in each case, 7, 9, 10, there are supporting documents. Information relating to books of accounts and other documents. So you have to submit an information. Maybe the audited balance sheet as on date of filing the application. So it is not mentioned, but information relating to books of account, that means the audited balance sheet or the unaudited balance sheet, whatever the situation. So the books of accounts information has to be submitted. Practically, if you see what could be the possible details, so it can give the list of the creditors, the list of default which has been made, to whom the default has been made, and any relevant information, documents, evidence, communication with the respective creditors with respect to default that can be produced. So information related to books of accounts and other documents. So other documents will include such documents. Then you have to propose a name of the IRP. Remember, friends, very important exam question, which we'll discuss later on also. Whether the name of IRP has to be proposed by financial creditor, answer is yes. Whether the name of IRP has to be proposed by the corporate debtor under section 10, the answer is yes. Whether the name of IRP has to be proposed by the operational creditor under section 9, answer is no. Not necessarily. Not necessarily. And third is, a SR has to be filed, passed by the shareholders of the corporate debtor, or the resolution passed at least by 3/4 of the total number of partners. 3/4 of the total number of partners. 3/4 of the total number of partners approving the filing of application. So these are three relevant important documents. Again, what is the order passed? Admitting, rejecting. Admitting, rejecting. So here, not much of detailing will be given. When the application is complete, you will accept, obviously with no disciplinary proceedings. That is the standard wherever the name of IRP has been proposed. Application incomplete, reject. If rejecting, time will be given for rectifying such default, if there is any default. 7 days. So that's a standard thing which will be there. Friends, very important. Section 7, 9 and 10. Section 7, 9 and 10. Application filing by, in practical, which circumstances trigger section 10? I think a question has been raised by Ambika. Practical situation. So Ambika, the practical situation is very clear. When there is a default. When there is a default. So if a default happens, you can file. If a default happens, you can file. If a default does not happen, you cannot file. Default, when you are not able to pay the debt to banks. When the company thinks that the bank is not applying for insolvency, financial creditor is not coming and filing for insolvency, let me go myself and apply to the NCLT that I am not able to pay this amount of debt. So I want to apply for insolvency because I am not able to pay that amount. So that is a practical scenario. When you are not able to our operational creditors, you yourself go. So a very simple example, when the financial creditor and operational creditor do not approach, you yourself can approach. Again, just trying to remind Ambika. Remember, insolvency process is a solution. The IBC code is a solution to the state of insolvency. So nothing wrong in applying because you're not able to pay the debt. Probably this process may give a solution where the creditors may be able to realize a good amount by this process. That is the objective. See, if for other reasons the application is being made, that is obviously a question which can be raised at the proceedings and the adjudicating authority can take an appropriate decision. Then, who are the people who cannot initiate insolvency resolution process? Very important. Exam question. Exam question. Who cannot apply to initiate IRP process against someone? So a company. What is this? A company cannot apply, but a company which is already undergoing an insolvency process. So that means company which is under CRP, it cannot apply, initiate insolvency process against someone. But we'll see an explanation. A company which has completed CRP process 12 months preceding the date of making the application. So within 12 months, this particular process is already being completed, then we cannot apply. A company which has violated any terms of a plan which was approved 12 months before the date of making an application. So resolution plan which will study under section 29, 30, 31, where a company comes and bids and applies for a solution for this particular insolvent company. But when it applies for a resolution plan, but it has violated the terms of resolution plan which is submitted, then that company can not apply for an insolvency process. Then a company in respect of whom which a liquidation order has been made. So a company which is under liquidation, that is not entitled to initiate resolution process. Or a financial creditor who has violated any terms of resolution plan. So this point and this point are same. This is with respect to corporate debtor, this is with respect to financial creditor. Point is same, but because the resolution plan can be submitted by anyone, so it can be a financial creditor, it can be a corporate debtor, so both are not eligible if they have violated any terms of the conditions of the resolution plan. Very important, this definition, amendment, which has been brought in. It has been clarified that nothing in this section shall prevent a corporate debtor referred to in clause A to D from initiating CRP process against another corporate debtor. That means a company which is under insolvency, can it initiate CIRP process against another company. Because of this explanation, this particular explanation, a facility has been given to the company that which is undergoing a CRP process, that if they want to file a CRP process against some other corporate debtor, then it can do so, because there are practical scenarios which happen. Suppose for example, the objective of the code, remember, maximizing the value of the asset. That is first objective, remember. Second, who will do the process? The insolvency professional will execute the process. Now, when the insolvency professional executes the process, he finds that there are some amount due from a company. And that company is not paying that amount. To the corporate debtor. So because of this particular section 11, there are restrictions. But this explanation gives the power to the IRP that yes, you can go and file a case against some other corporate debtor to take that company into insolvency, because that company is not paying that amount. So that may be a possibility, because I am trying to maximize the value of the asset by realizing that amount, but that company is not paying, so I can file a case under this explanation. Very important, because this came as an amendment. So this amendment was brought in to facilitate the process given and support the process of CIRP, maximizing the value of the asset. So friends, remember 7, 9 and 10 and 11. One question is definitely expected. Out of this section. Nishant is asking that how will company benefit by going itself in insolvency process? Friend, Nishant, let me tell you, see, when you are not able to pay any debt, what is the use of carrying out this company? When you know that when you are trying to run the company, but you're not able to run the company properly, and I'm not able to pay the debt. So what is the way out? I apply for insolvency, and through that insolvency, somebody else can come in, put in a resolution plan and buy out that company, may be able to pay off the debt, and he may run the company, and I may be, relieved of all my liabilities. So this is the benefit the company would be taking, that when they are not being able to pay the debt, and going forward they know that they will not be able to pay the debt, so to relieve from themselves from the whole process of paying off the debt, they apply for insolvency and say that somebody else can buy out, come as a resolution applicant and take over the company and pay off the debts, whatever is required, because I am not able to pay that. So that is how the company will benefit, and the stakeholders will get the benefit of the whole process. I hope, Nishant, I am clear. Otherwise, you can raise another question to me. Okay, so this covers one part, friends, section 7 to 10. Now, a small element in this whole process is can an application which has been filed, can it be withdrawn? Can I withdraw the application once it has been admitted? Remember two words, rejected, admitted. Once it has been admitted, can it be withdrawn? The answer is yes. It can be withdrawn. But how? So the AA, very important. Remember, exam question, exam relevant section. Who will allow the withdrawal? Adjudicating authority. Which application? Any application under 7, 9, 10. Who will apply? The applicant who has initiated the process. Along with what? 90% voting share of the COC, which we'll discuss later on, where the COC is created, and that COC will vote on this particular withdrawal of the application by giving 90% approval, right? In the process, in the manner in which has been specified. So a definition process has been given. So here comes a very important section, friends. The whole process may go on, but Can it be withdrawn? The answer is yes, it can be withdrawn, provided a 90% voting has been done and approved by the committee of creditors. So the question comes in, sir, when will this committee of creditors be created? And what will happen if I want to make an application before this committee is created? So the scenario is, this: can the application be withdrawn before forming of COC? Because COC formation will take time as per law. It will take around 30 days before the COC is formed. The first meeting will be happening within 30 days. So can it be withdrawn before the formation of COC? The answer is yes. Then you would say, sir, what about 90% voting share? The COC has not been formed. How will I get that voting share? So friends, there are some other regulations which gives the power to NCLT within the NCLT rules and regulation. Within the NCLT rules and regulation, where under that power, the NCLT can allow the withdrawal of the application anytime before the formation of COC. Anytime before the formation of COC. And that is Rule 11 of NCLT rules. Rule 11 of the NCLT rules. So can it be done? So it can be done before the formation of COC. Remember, friends. So this covers our first part, friends. Application, who can apply, admission, rejection of the application on different conditions, and the withdrawal of the application. So let's share some few questions, very elementary questions. I hope you will be able to answer it. Who can initiate CRP process? Very simple, very straightforward. T. Yes. Which among the following is not entitled to initiate CIRP? Not entitled to initiate CIRP. So we have understood a company which against whom a liquidation order has been made. Right? They are not entitled to initiate CIRP. What is the time limit for completion of IRP of the insolvency resolution process? So remember, friends, we have discussed the time limit 180 days, extended to 90 days, overall 330. But from which date? From which date? That is important. When the application is admitted. That is the insolvency commencement date. ICT. Insolvency commencement date. Remember, this is the important date which you have to remember. Insolvency commencement date. How much is the extension possible for completion of insolvency resolution process? 90 days, that too once. Maximum 90 days. Maximum 90 days, that too once. Okay, friends. So completing one part where the order has been admitted or rejected. Obviously, if it is rejected, I don't need to go further. We'll stop. You can enjoy at your home. But the problem arises when the order has been admitted. Problem arises when the order has been admitted. So what next? What next? So if the application is admitted under section 13, what is going to happen? If the application is admitted Then what is going to happen? Moratorium will be announced. Very important. Public announcement will be done and IRP will be appointed. Three things are going to happen. 3 steps once the application is admitted. You see any order of NCLT which is available on any of the websites of NCLT. You see that order of NCLT. You will find that within that order there are 3 things which are given. First, it will mention about moratorium. Second, it will tell about public announcement. And third, it will say the appointment of IRP. 3 things are always mentioned in the order. So, moratorium, public announcement and IRP. So, we need to understand the process or what will happen under moratorium, what is going to happen in public announcement, what is going to happen in appointment of IRP. So, as I mentioned that the contents of order would be moratorium part and what is going to happen in the moratorium. So, the impact of moratorium. Exam question, section 14. Section 14, the impact of moratorium. Impact of moratorium. The impact is that whatever cases, suits which are pending or proceedings which are going on against the corporate debtor, including any judgment, execution of judgment, decree or order, any court of law, tribunal, arbitration panel, that will come to a standstill. Very important, friends. All cases in general word, all cases, that is the suits or continuation of any pending suits will stop, and it cannot be executed, carried forward till moratorium ends. So remember, suits, pending suits. Then second, disposing of the assets of the corporate debtor. You cannot sell the assets. The management cannot sell, alienate, encumber, dispose of any by way of the corporate debt, any of its assets or any legal right. So no selling of the asset. Then any action to foreclose, recover, enforce any security interest created by the corporate debt in respect of its property, including any action under SARFAESI. All actions under SARFAESI will come to a standstill. Stop. No further proceedings can be carried forward. Till how much time period? Till the end of the 180 days. Remember, moratorium applies only to the extent of 180 days. We'll discuss. So, any action which has been taken under SARFAESI or any action which is required to foreclose any security interest, that means the company goes and applies that I want to settle, I've settled this amount, you cannot do that. Then recovery of any property by an owner or lessor where such property is occupied by in the possession of a corporate debtor. So if I am working on a rented space, nobody can come and recover the property. Nobody can come and recover the property by an owner or lessor where such property is occupied by or in the possession of a corporate debtor. Till that time, will come to a standstill. So the impact of moratorium is huge, friends. Remember, this is one of the biggest benefits the company gets for 6 months. It is a breather. It is not permanent. Remember, it's a breather. Giving them space to breathe, space the company to breathe, so that a proper resolution plan comes in and the stakeholders' interests are taken care of. Because if you don't give this moratorium, then the value of assets will decline. So therefore, this breather is given that relax, don't worry, nobody will come to you. Nobody will file a case against you during these 6 months. Let things settle down. And then you can proceed after 6 months. Further, No license shall be suspended or terminated on grounds of insolvency. You cannot terminate any license on grounds of insolvency. Obviously, once you are running the company during insolvency and you are not paying the current dues, subject to the condition there is no default on payment of the current dues. See, for old payment, I will say no, please, I would not pay any old payment dues against that license. If you want, you can put in your claim. But yes, and I'm continuously using your license during the CIRP period. For that particular usage, I need to pay. Because of non-payment of that dues, which falls under CIRP period, current dues, during the moratorium period. In that case, there should not be any default. If there's a default, then the license could be suspended. Remember, friends, very important, no suspension of license. Then, supply of essential services, the electricity, the water, internet services, they can come and say, I'm going to stop, you are under insolvency, I'm not going to supply you. They cannot do that. They cannot do that. They shall not be terminated. Supply of essential goods or services to the corporate debtor shall not be terminated. Again, provided the condition remains same, that for the current use, the corporate debtor has not paid dues arising from such supply during the moratorium period. If you are not able to pay the current dues which relates to the moratorium period, then these essential supplies could be stopped. But for old dues, you cannot stop the supply of essential services. Remember. So very important, friends. One exam question. What is the impact of moratorium once the NCLT admits the application? It will only arise admitted. So what is going to happen in admission? Remember, moratorium, we have understood what is moratorium. Public announcement and appointment of IRP. But there are certain exemptions for the moratorium place. Remember, this is very important. So any transactions agreement with the central government things, they may be notified by the government and that shall be exempted from application of 14. So there could be certain scenarios where moratorium would not apply to particular agreements. Then moratorium would not apply to surety in a contract of guarantee to a corporate debtor. That means moratorium will apply to the corporate debtor, not to the guarantors of the corporate debtor. So let's say, for example, for a company, let's say, for example, Reliance Communication, if Mr. Anil Ambani has given a guarantee, so moratorium would apply to Reliance Communication, but moratorium would not apply to Mr. Anil Ambani. Right? Remember, in that case, it would not apply to Mr. First Person. Duration of moratorium, date of effect of order. So the date of such order till the completion of the whole process. Till the completion of the whole process. And date of effect of order, it is provided that during the whole process, if the process comes to an end before the 180 days, then till that particular date. Till that particular date. So either you wait till 180 days, it is over if extended, or if it comes to an end before 180 days, then if the adjudicating authority approves the resolution plan or passes an order of liquidation, the moratorium shall cease to have an effect. So if the plan is approved before 180 days, if the liquidation order is passed before 180 days, the moratorium will come into picture. So For moratorium, three things. Impact, when it not be applied, and second, the time period. Impact of moratorium, there are 6 points. These 4 points: no suspension of license, supply of essential services. Remember. Then, when it not will apply, specific example I had given, and the time period of moratorium, till what extent the moratorium would apply. Who shall declare a moratorium, friends? Who will declare the moratorium? You, me, AA, right? AA will declare the moratorium. Which of the following activities shall not be prohibited? So, which are prohibited, which we know? Transferring, incurring, disposing of an asset, is it prohibited? Yes. Recovery of any property to or owner or lesser where such property is occupied? Yes. Any action to foreclose? Yes. This you cannot stop. It will not be prohibited or terminated. Remember, supply of essential goods cannot be prohibited or terminated. So the question will frame which are the things which are not prohibited or terminated, cannot be prohibited. So supply of essential goods cannot be prohibited to be supplied to the corporate debtor. Condition is there. Condition that yes, if for old dues we cannot prohibit, but let's say if we are not able to pay the current dues of the moratorium period, then it can be prohibited. You have to answer it in complete. So 3 things, friends. We have understood moratorium. Let us understand appointment of RP. Because though it is mentioned that in the order public announcement has to be done, but who will do that public announcement? Who is going to do that public announcement, friends? So it is the IRP, the person who is appointed will do the public announcement. So let us understand the appointment and then we'll understand the public announcement. Exam slide. Who will appoint? First question. Who will appoint the IRP? The AA will appoint an IRP. The AA will appoint an IRP. 2 scenarios. The application is filed by financial creditor or corporate debtor. Application is filed by operational creditor. So, first question, AA is going to appoint it. So, we have segregated into 2, section 7 and section 10 and section 9. 7109. So, in case of under 7 and 10, the name proposed in the application. The IRP proposed in the application, provided no disciplinary proceedings are pending. Fine. But for operational creditor, where the proposal is made for the appointment of RP, obviously that IRP, provided no disciplinary proceedings are pending. But if no proposal is made for appointment of IRP, if there is no proposal, then what can happen? Then the A shall make a reference to the board IBBI for the recommendation of an IP who can be IRP. Then the IBBI may recommend the name of IRP within 10 days of the receipt of notice from the AA. So in that process, it will be the name will be taken from the board. Normally, practically what happens, the IBBI creates a panel of all the IRPs who have empaneled with the IBBI to be allotted some work, if any. So the AA may take any name from that particular panel, obviously by making a reference to the board, and from that panel they can put up a name and propose that name in the order admitting the application. So this is an exam slide. Under two scenarios, remember 7, 10 and 9. 7, 10, obviously name has been proposed. Under 9, the two scenarios, name could have been proposed, name may not have been proposed. If the name has been proposed, so obviously that name subject to no disciplinary proceedings. And when the name has not been proposed, a reference will be made to the board. And once the reference will be made, IBBI will give the confirmation within 10 days. Question comes in, who is eligible to become an IRP? Who is eligible to become an IRP? So, as per regulation 3, IRP insolvency professional shall be eligible to appoint as a RP for the CRP if he and all the partners of the IPE so the eligible is that first criteria, they are eligible to be appointed as an independent director on the board of the CD. So when they are eligible, so if you fulfill the conditions of an independent director, probably you can be an IRP. Is not a related party to corporate debtor. So here comes the definition word related party. We'll see the definition of related party in subsequent section also. So not a related party of the corporate debtor. Is not an employee or proprietor of the firm of auditors or secretarial auditors in practice or cost auditors of the corporate debtor in the last 3 financial years. So you should not be the auditor of that particular firm with respect to anything. So first, independent director, related, and not a auditor, and not an employee, proprietor, partner of the legal consulting firm that has had any transaction with the CD amounting to 5% or more of the gross turnover. The financial year. So 4 conditions: that you are independent director, you are eligible to be appointed as independent director and not related, and obviously the commercial relationship has been defined. Period for which the appointment will be done. Here again comes an exam question. Some technicality is involved here. Till what time period? The IRP. Remember friends, I am talking of the word IRP. Sir, you would say, sir, what is IRP? So friends, for us here, IRP is interim resolution professional. Remember, the word A will appoint the word interim resolution professional. So whenever the word interim comes, that means the interim will have a certain time frame. That is why the word interim is coming. So the A will appoint an IRP, interim resolution professional. And the period of interim resolution professional will be till the date of appointment of the resolution professional by COC in the first meeting. So IRP will remain in the picture in the whole movie till a new person known as RP will come in. So RP and IRP, basically they are the same people. Same people in the sense they are the insolvency professionals. So within insolvency professional there are 2 categories, IRP and RP. IRP is for a particular time period, that is interim. And RP who takes on the proceedings from IRP till the end. Till the end. So the person who works till the end is known as RP. The person who is appointed at the start is known as IRP. So at the start, IRP will come in and then RP will take on the job of IRP. So first question which I know might be coming into your mind, whether IRP and RP, can they be the same person? Answer is yes, they can be the same person, provided COC approves. Provided COC approves, right? Remember, provided the COC approves, they can be the same person. Can they be different person? Answer is yes. So it all depends upon the COC, the Committee of Creditors, whether they want to appoint the IRP as the IRP or they want to propose a new name of RP in place of IRP. So the COC will decide the fate and the destiny of that IRP till the end of the CRP process. So IRP can be same as RP, RP can be same as IRP, or it can be different. So the role of IRP has been defined till the RP has been appointed. The role of IRP has been defined till the appointment of RP is being done. So that is why till the date of appointment of RP by COC is done. Remember, so that is the scenario. And when will the COC do it? In its first meeting. So an exam question, IRP will be appointed till what time period? Till the appointment of RP in its first COC. Now, when will the first COC held? That is as per the provisions. Whenever the provision says that the first COC has to be held, normally it is 30 days. Normally it is 30 days. So within 30 days, the IRP will be changed or he will continue as RP. Now, whether the appointment will be done by COC, the answer is appointment will not be done by COC. COC will approve the name of the proposed IRP. Appointment will always be done by AA. Appointment will always be done by AA. So, to show you a chart, this is the chart, which is very important. This covers the whole chart of appointment of IRP and RP. So first step, appointment of IRP by NCLT under section 916. That is the first step. The duration till IRP is appointed as per section 16. First COC and is existing IRP appointed as RP? It can be no, it can be yes. It can be no, it can be yes. Voting will be done and 66% voting share is required. So that means the IRP will give a proposal to the COC that he wants to be appointed as the RP. He wants to be appointed as the RP, and that will be subject to vote. That will be subject to voting by the COC. So if the COC votes in favor of the IRP, that is 66%, then intimation will be given to the corporate debtor, the adjudicating authority, and the IRP that you are continuing. But if it rejects, then the COC to propose to replace the RP, provided a written consent has been taken from the new RP. Written consent has been taken from the new RP. And then an application will be made. It's a process, friend. It's a process. So from exam perspective, I'm trying to make you understand the whole, different provisions coming into the picture for the appointment of IRP and RP, so that you have a clear picture. And then what is relevant from exam, we'll discuss that. So COC will propose, provided these conditions are made. An application will be made to the AO for the appointment of RP. AO will in turn propose the name to the board, forward the name to board. Board will confirm within 10 days. Confirms, A appoints this RP in the same way as under section 16. Right? So this whole process continues. So this RP will work till the end of the CRP process. Till the end of the CRP process. Now, what is this important point? Very important. I have covered all the appointment of RP and IRP in one slide. Can the RP which has been appointed in the first COC, can he be changed? In the first COC, the RP was appointed. and during subsequent time period, COC feels that they want to change the RP, can it be done? The answer is yes. He can be changed as per section 27. Again, 66% voting is required. Again, 66% voting is required, written consent, and then the whole process will be followed. Whole process again will be followed, and that new RP will again perform till the end of the CRP process. So remember, IRP, RP, two words, interim resolution professional and resolution professional, both are part of insolvency professional. Ambika is asking one question, is IRP appointed during moratorium period? Ambika, I mentioned that, just going back to the slide where when the application is admitted, Ambika, watch this. Three things are going to happen. First, declaration of moratorium. The order of the A will mention that moratorium now starts from the ICD, insolvency commencement date, and IRP is appointed from today. So when I mention that A mentions in the order that IRP is appointed from today, that means, and from today itself moratorium applies. So the moratorium period starts from today. The appointment of IRP starts from today. It is not that the IRP is appointed during moratorium. They are appointed on the same date by the order of A. Remember, I hope I am clear. Ambika is asking, COC meeting held before them. See, moratorium period, again, let me go to the duration of moratorium. I think there's some confusion. Moratorium starts from day 1 and will continue till the whole process is completed. So let's say 180 or further extended to 90 days. During this period, there will be COC which will be formed and the meeting of COC will be done. So obviously, the COC meeting is done during the period of moratorium. So moratorium period is from day 1 till 180, 270, 330. We have seen 3 dates. And during this period, the COC will meet at different point of time. So COC meeting is held not before the moratorium period, but during this whole period of moratorium. We'll understand what are the powers of COC, who will be part of the COC. Right, friends. So here we were coming to the appointment of RP. So IRP can be continued as RP. We can have a new RP. And again, that new RP can be changed again as per section 27. Okay, so the period of IRP is complete. He will be appointed, he will be working till the new RP is appointed by the COC. But will the appointment end on this first COC? Friends, no. Until and unless when the A shall not by an order. A will give an order. Until the A will give the order and till the new name is not proposed, the A can direct the IRP to continue to function as RP. So that means till the final order of AA comes in, the IRP will continue to function. Even if it takes 90 days, 60 days, 75 days, whatever the day, the IRP will continue to remain as the in charge of that particular company till the adjudicating authority passes an order for appointment of the new RP. Remember exam question. Till what time period he will continue as RP as per the rule? Till the date of appointment of the RP by the COC in first meeting. That is fine. That is as per section 22. But the COC is only going to propose the name to adjudicating authority and the adjudicating authority will give an order. So till the time the order is received, the IRP will continue to function. Remember, this is the final answer. The IRP will perform till the AA gives an order of appointment of the RP. And in one of the regulations, it has been mentioned that the RP will be deemed RP. Though the word deemed RP has not been given, the deemed word, but it is mentioned that RP will be functioning as an RP from the 40th day. So if from the till the 40th day no order has been received from the AA for the appointment of new RP, IRP will take the role of the RP. So maybe there might be certain difference in the functions and duties of RP. That is why this definition, this passover has been given. So from 40th day, the term IRP will change and the term RP will come in. Till 40th day, he will function as IRP. If before 40th day the order comes in for appointment of new RP, then obviously the changeover will happen. So that may take place. So final conclusion, sir. Conclusion 1. He will be working till the date of appointment of the RP by COC in his first meeting. But then the COC will propose the name to AA and AA will pass an order. Second point. Therefore, third point, the IRP will continue to work as IRP till the date of order of the AA. That is the third point. Fourth point, what will be the designation given to IRP? So the IRP will remain as IRP till 40th day, and after 40th day, the designation will be changing from IRP to RP as per regulation 17. So these are the 4 points to be covered in the whole time period of appointment of IRP, time period for appointment of IRP. So what is the role of the IRP, conduct of the CRP by RP? I will discuss this and then conclude for today's topic. So the role of IRP would be, we understand that A appoints the IRP, then he will do a public announcement. He will do a public announcement and call for the claims. So obviously this is the part of the whole process is going to start from day 1. This is all part of day 1. So declaration, moratorium, appointment of IRP and a public announcement. Obviously public announcement will take certain days. We'll discuss that. So the role of IRP is, remember, management of affairs of CD, consultation of claims, review of this till appointment of RP. So the function of IRP will continue till the appointment of RP. Remember, what are the functions? We'll discuss in detail. So objective of this slide is to ensure, to let you know that this first layer is on day 1. Obviously public announcement will take 2 more days, and after that the function of IRP will come into picture. So public announcement, it will be done in paper, not later than 3 days. Not later than 3 days from the date of his appointment as IRP. Who will make those? IRP will make a public announcement within 3 days from his appointment in Form A. In Form A. So IRP, the first job, obviously it will be mentioned in the order the public announcement has to be done as per section 15. But actually who is going to do that? That is done by IRP. So the responsibility is casted on the IRP to do a public announcement. See, public announcement will be made. That is the order. So A will not give the public announcement. Remember, that is the problem. That is why the job of that particular public announcement has been delegated to the IRP. So it is not covered under section 17 or 18 as functions and duties of IRP, but it is covered under the section 15 of the public announcement, where it casts a responsibility that he shall make a public announcement. So when, friends, the process ideally, order will be done, moratorium starts, IRP gets appointed simultaneously in the order, and then IRP starts with the first step, that is public announcement, within 3 days, not later than 3 days. What will happen in public announcement? What are the contents? That is as per Form A. So obviously name, address, name of the authority. This is important. In that public announcement, the public announcement is for the purpose that this company is now under CRP and claim, they can file a claim. That is the purpose, friends. The purpose is very clear. The purpose is to invite, not the invite, but request, not the request, but give an information to the public that if you have a claim against this company, you can file a claim, and the last date for submission of the claim is this. Then obviously the details of the IRP for where they have to file a claim, who shall be responsible for collecting the claim, and certain important things. Right? So important things, public announcement is to give information to the public for submitting of their claims to the IRP. So friends, this is through which we have covered 3 parts. Yes, I think Jose has asked a question that did any company successfully complete IBC proceedings? Friends, let me tell you, there are so many companies which have successfully completed IBC proceedings, including big corporates, where the loan outstanding was more than 10,000 crores, more than 10,000 crores, 20,000 crores. Those companies have got resolved under the CRP process. Though the time period may have been more than 1 year, there might be scenarios because of all the legal disputes, legal litigation. But yes, the solution has come in terms of for the financial creditors and operational creditors, where they have received not the full amount, but yes, a reasonable amount as per the resolution plan. So a lot of companies have been dissolved under this process. A lot of companies have gone under liquidation also. So it all depends upon the state of affairs of the company and the interest of the resolution applicant. So I hope I have answered your question, Mr. Gigi Jose from Kerala. So friends, we have completed one process here today from section 1 to 16, where we have understood the process till appointment of IRP. Now, the actual action will start at the ground, at the company's place, where the IRP will come and take over the proceedings. And now the IRP has been defined certain job. He will do that job and subsequently hand over the baton to the RP. And then RP will take over till the whole end of the completion process. So day after tomorrow, we are going to cover the whole process of appointment of the functions of IRP, duties of RP, and the powers of COC. Powers of COC and the resolution plan. And then we are going to cover the liquidation aspect. So again, very important, friends. I think we have all seen that in the past, there is one question compulsory coming from the provisions of IBC. And I'm sure in the coming exams, we can expect one question, and that too a question which is at times not direct, but it relates to a particular scenario. So maybe I will try to cover the important points in the next lecture, and then we'll focus on few of the case-based scenario also, covering the various provisions which we have studied so far. So if you have any questions, you can obviously post it, and I will try to answer it. And the portal will be, the presentation will be shared, not a problem. The presentation will be shared on the BOS portal as early as possible. Right, friends? So thank you for coming out and attending today's session. See you on Sunday, same time with the insolvency. Remember with the fact that insolvency is not a bad word. It is a state which anybody can face. And this code provides a solution to that state of insolvency. Right? Thank you.